Good evening, my fellow traders. Today is 4th of September. Okay, now for this week, I'm sharing you a earnings trade. This company is called AVGO, also known as Broadcom in the past. The earnings announcement is September the 6th, according to this data, which happens to be Nasdaq earnings calendar. Okay, you can see it's after market close. So means what? You have tonight, tomorrow night, and up to 6 nights to open a trade. Okay, whatever you do, you must open a trade before the 6th of September market close, because if you do, because the announcement will be announced after market close on the 6th. So if you do it on the 7th, the war is over. It will not be an earnings trade anymore. What is earnings trade? Earnings trade is actually a two-style trading. One, breakout trade. Two, income credit spread trade. Means that we are selling expensive options. Why expensive options? Because earnings create uncertainty. Earnings create big movement. Okay, let me show you by that. Look carefully here. You can see now. So now this underlying is about $219, and the money call is $5, 480, 530, and 480 here. Let's do earnings trade now for the trade. Earnings trade we are looking to do, we are intend to, for based on analysis, we are going to sell 230 call. We short 230 call, automatically we buy 232.50 to hedge. Thomas very happy. Thomas, you should make money. Stop. We adjusted here. We also need to adjust the put side further out of the money. So next we go analyze. We go to look at 250, not very good. Why? The price is too cheap. 27 something, also so not good. 210, not very good. Okay, let's go and sell 212. 212. Sell a 212 put and hedge by buying 210. We are calling $1.20 for this trade. Maximum risk is how much? 130. Return over risk is more than 90% returns. It's something you can do. For those people who are more technical inclined, let's check the chart patterns. As you can see from here, chart patterns here, okay, is actually now in the sideways market. Secondly, Thomas, wow, got big gap. Stop. The big gap you see here is nothing to do with earnings. The last earning gap here, the gap is about less than $10, about $8 gap plus minus. This gap here, you can see last earnings, there is no gap, but there is a $10 retracement movement downwards. Then here, how much you get? As you see from here, there is not even movement here. You can see. Also another candle move $10 movement outward, a range outwards and downwards. And you can see from here, this is dividend, so we're not interested in dividends. So this one is not a big mover. This is not earnings gap, ladies and gentlemen. This is a normal market gap. Here's a normal market gap. All this is what I call news gap, caused by other news that is not factored as earnings. The biggest gap I can see over here is about $8 gap here. Quite high, collapse, and retrace upwards. Anyway, objective exercise now is to sell for credit 100%. And how much? 100% return. Now the price is 115. I suggest you can queue it now for 120 tonight. If you can fill, so much better. If not, can try tomorrow night, and you also can try on Thursday night. Wherever it is, try to do the trade before 6 market close. Thank you. Any question, drop me a WhatsApp.